Coming up in this show, I'm going to bring you my comments on the markets. Arvi has a sample of a trade idea that's level 3 content, and he gives a great lesson on a bearish trade in the US dollar JPY. I'm going to show you our special on our cycle analysis workshop, and this time you sign up, you're going to get a free membership. And then we'll take a deep look at the S&P 500 as I look at the weekly and daily charts.
Well, I'm going to sit and I'm gonna do a silly show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in coming weeks, and hopefully lots of great ideas and opportunities for you throughout this show. Well, it's a little shorter show. It is a holiday week, and the market was quite slow this week. It was up early during the week, and that was led by the oils and that news that came out about OPEC Plus with a surprise 1 billion barrel a day cut. But then very weak economic data from the JOLTS and ISM services and plunging manufacturing numbers really started to give a sense that there is a big slowdown just ahead, and the markets moved down from that. It was a week in which we saw changing leadership, as we expected, as old economy and energy stocks, they got some strength in there as the overvalued, overbought tech stocks in that NASDAQ index, well, they started to show some weakness. And we think that that's going to be a trend for a while as we begin to see other stocks take over. This is an unusual week, is that it's closed on Friday. That's Good Friday, but the payroll numbers are still coming out. And it looks like there would be some trading, only a little bit of an abbreviated trading on the futures on Friday because that news is coming out, but then the markets will be closing quite early. Overall, the stock market is following our projections very closely. We thought it would decline into the March timeframe and then reverse to the upside for some months to follow. And please do watch our year-end special reports. And you can see that in two parts that came out in December and January, and those are available on YouTube. And you'll see what our projections were for the year. And just a lot of them are just following very, very closely. Stock market, the metals markets, the bond market. I think you'll see that we really pegged a lot of these moves. So the market moved up right now to a formidable resistance level. And we think that we're going to get a little brief correction in here. And the details for that, they're coming up in just a few minutes. For investors, I really don't see a lot of risk in this market until the peak that we expect to come in the stock market in the fall. In the meantime, it could be quite choppy, but still, I don't think overall there's any big downside in here. And the S&P 500, we think that they will move up to the targets that we showed in that year-end special. So do tune into that to see what that was, what our targets were. And for now, we're just going to look for a two-sided choppy trading, and I'll show you that as we just get into the charts in just a few minutes, as we look at the weekly and daily S&P 500. For the week, it was a mixed week, down small for the S&P 500 and the NASDAQ, the Dow Jones Industrials up small, but the Russell, that was down about 2.5% on the week, and that's come into some support on the Russell. So I have a feeling the Russell is going to start to do a little better compared to the rest of the market. Bond markets, 30s up 2.5 points, the 10-year yields down about 20 basis points, and all of that very much in line with our analysis that we have been showing in the bond market, and we think the high for yields are in. Gold up $25. That hit our first upside target. Silver, the same thing, hitting targets up 84 cents on the week. And those are extremely strong. And we think that really relates to what is a lot of trouble for the US dollar. Now, the US dollar was down 0.6% for the week. It is in a precarious location. And we think that there is a dollar debacle coming sometime this year. Doesn't have to be right now, and it can firm up pretty soon and get a little bit of a bounce from here. But we think the dollar is in a lot of trouble, and that's going to shake up the markets when that does come. Oil up 460 on the week. This is the second week in which it had big gains. Of course, this was a big upside gap on Monday because over the weekend came that OPEC plus news. And I'm telling you that somebody knew, because the oil market was up $5 the previous week, just out of nowhere. So somebody was buying in advance of this news that pushed the oil market up very significantly. That is the opening. I want you to go to the askSlim website, explore, look around. You want to get an idea where we are right now, sign up for our level 1 deal, level 2 deal. You can ask Matt for that, and that's Matt at askSlim.com. On YouTube, subscribe to the channel, click the notification bell, and do like this video. Give it a thumbs up. On Twitter, follow us at askSlim. And for any questions you might have on anything we present here today, on our content or educational material, you can write to Matt at askSlim.com. All right, this is a trade idea. Ari does an amazing job of teaching cycle analysis here on this bearish setup as he looks at the US dollar, Japanese yen. In my earlier comment, I talked about the weakness that we think is going to see, could be coming in the dollar this year. And this is looking at these charts, show you how that's reflected looking at the Japanese yen. Ari does a great job. Again, these trade ideas come out for level 3 and 4. All of the time. So Ari, show them this great analysis.
This is an askSlim traded video walkthrough for a short-term short in the USDJPY. What we're looking at here is a fairly risky pattern where we're late in this intermediate term corrective period. We are only watching for a bear flag to form and then for this to turn back on the downside and likely look at this old low at 127.21, and there is a low here that is due 410 to around 515. If we go ahead and shift over to the daily chart, now this is what is really happening here, is that we are looking at this as a likely early cycle high that is forming, and that does make sense because we are late on the weekly. So we would look for an early high to form in this rising phase, then for this to actually sell off and form likely a left-hand translation. And if that were to happen and we actually were to move through this old low at 129.63, that would put this old low here on radar, which comes in once more at 127.21 into this next low. This low here is due 5.4 to 5.16. So this is really what we are looking at overall in the USDJPY. Now let's go ahead and actually walk through where we have set up these levels. Now, we have drawn these lines right there off of this minor cycle high to that minor low, okay? And why did we do that? Well, look at this period right here that actually formed that key low. Look at how we behaved relative to that falling slim ribbon. We formed just a really muted rising phase, did not trade through that falling ribbon, and then turned down. And then what happened? You can see we formed a nice bear flag right there off of that minor rising phase, failed again at the ribbon, turned down. It obviously rallied again, failed again at the ribbon, turned down. So we are using this falling slim ribbon as a guide in terms of where to set up our price levels. All right, so with that in mind, let's now zoom in a little bit. Okay, so I said we use this high to that low to do our anchors. Why? Because keep in mind what's happening. We have still a mildly negative ribbon that has to turn more negative for this to obviously trade lower, right? So let's keep an eye on this to see if this can get more negative on the downside, very similar to this period right here where we turned down, and after that it was every rally failed on the downside. So that's really what we would like to see overall. Now in the short term, we have actually drawn our levels. Let me draw them in for you so you can see them from that high to this low. And we use that minor 50 to the 61.8 to come up with our levels. And that is 132.37 to 133.01. That is right in line with that falling slim ribbon right there. You can see that right there with the 13 EMA and the 21 right in that zone. So we are looking for a failure right there and right around that area. And we are actually looking for a move in the short term through this old low to form that left-hand translation here on this chart, okay? And we do not want to see this trade over this high, which is also in line with that minor 78.6 at 133.91. So what are we looking at here in terms of our overall risk? It is coming in around 158, looking for a move of at least 270 here on the downside in the USDJPY. So that is our look here at a short-term short in the USDJPY. If you would like to see more of our trade ideas, please go ahead over to askSlim.com and sign up for a level 3 or 4 membership. Thanks again, and I hope you all have a great day.
Super work on that. Thanks. All right, stock market analysis. You're going to love what we have to bring you, but first, you got to see this. This is our cycle analysis workshop special package. We do this rarely, and this is actually the first time we've ever done it this way. You can invest in this invaluable workshop and receive 1 free month of our level 3 membership, 1 free month of our new premium market condition monitor. You get that by investing in the workshop. This is a special 38% discount. It's $897 of a $14.50 value. Now that level 3 and the market condition monitor are 1 month non-recurring, so you'll never get billed for that again. You'll just get an idea of what we do at those levels and this great MCM product, and also the cycle analysis you get, which is lifetime and 24-hour access. So you'll be able to watch everything that's in here at your leisure, just when you want, and watch them over and over again. Some people tell us they watch this 3 or 4 times. If you are a present level 3 and 4 member, you can still save 38%. That's $500 off of the cycle workshop, just $797. And you can write to Matt at askSlim.com for that special link. What you will get in this workshop, well, you're going to get my method of analysis developed over 48 years. It took me 2 years to write this and over 6 months to produce, with 23 video modules, plus many of our tools for text videos that are associated with the work connected to it. And you'll be able to just click on them right there. This is online lifetime access, and you don't need a special platform. You will never look at charts the same as you did before. This improves your directional decisions as you project in time and price, which is something very rare. Most types of analysis project only in price, if they do project, but we project in time and price, and you'll learn this great analytical method. Matt has a demo reel. If you want to see little clips from some of the videos, you can ask him for that. Just go to askSlim.com and click on the workshops tab, and you'll be able to see more information, or write to Matt at askSlim.com, and he will send you the link. Tell him you're interested. If you're a free or level 1 or level 2, this is ideal for you, because then you'll get level 3 and the market condition monitor. And if you're a level 3 or 4, well, you're going to get this special price. That's the askSlim Cycle Analysis Workshop Special. All right, here comes my stock market analysis, but always have to bring you this important information of how we do our analysis and what you need to know about it. So take a moment and read this slide. All right, we're going to take a 1 to 3 month view of the SPX. We're going to look at the weekly and daily cycle analysis, and I'm going to show you why I think that in the coming months that we are in, just between now and probably sometime in May, that we're going to be in a very, very choppy time frame. Let's take a look as we switch over now and look at these charts. This is the weekly chart of the S&P 500. And for those of you that are brand new, on the bottom here are the cycle brackets. These are simply a drawing tool that help us understand the rhythm in the market. If you look at the smaller one here, which we call the minor cycle right there, you can see how it almost perfectly followed in here those rhythms right in there. And right here where there was this nesting, or right here where the nesting comes, is where the downward energy dissipates, and then the upward energy or money flows come back in and move up. You can see that. Here was this minor and the intermediate right over here that was coming down, and we thought it would come down here. We thought it would fall between 300 and 600 points there, and it actually fell about 400 points. It hit the support zone and then turned up again. Once it moved above the 78.6 at 41.15, which it just barely got over there, it proves that this has made an important intermediate low. And here you could see our momentum indicator turning upward right over here and telling us that bullish conditions do exist. Now there is a bigger cycle right in here that the European markets and the Russell are following more closely. And that says to us that somewhere here it stalls and the resistance area probably comes down to the minor supports. The timing right in here is mid-May to mid-June, right there where that comes down. And the shorter term patterns look like it's April, one dip in April and one dip in May. I'll show you that. Then we expect it to be moving up again. So our target for the year was right up around this major 61.8, potentially up to this 78.6% fib extension. So that would take you about 4,300 up to about 4,370. That would be our high for the year. Our original target, if you watch the year-end special, was 4,300, and that was on this analysis. Out over here in this July-August period is really where we think that the potential is for the biggest upward thrust to get to those targets. Then after that, there is a important low, and for our people that watch our Future Speak show on Wednesdays, you can see the VIX patterns, or you could see it if you're a level 4 member and get our charts, or level 3 members also, that there are important troughs in the VIX out in this period of August through October, and that says that's where the peak of this bull phase is likely to come. Again, 4,300 to 43.70 is the likely target. There is one more resistance here at about 42.45. That could be where it stops. But somewhere here between 42.50, 43.50 is where we think all of this upward thrust is going to really push. That will be the big hook that makes the top for the market for the year, is what we believe is going to happen. It would have to get way down close to this level down over here around 3,800, 38.07 in order for us to think that that had changed and be in a much more negative condition. So right now we have these supports right over here. You can see that that's around 41.10. This is at around 39.71. We believe that will be the area of the bottom of the range in here during these corrective periods. If I look here at the daily chart, take a little closer look in here, you can see this spectacular rhythmic motion. I'm just going to look here at these last 5 cycles. This is absolutely incredible. When you look at that, you can see that. Let me just get my arrow here. I don't have my big arrow today. You can see right over here that you have almost perfect cyclical rhythms in here as they align with this and this and this just perfectly. And then this place right over here, each of these yellow zones is where the corrections come in. So if I look right here, you can see that, well, this is that correction right over there that points into about the 3rd week of April. So it could just bounce around in here a little bit. The Friday payroll numbers might actually get the market to come back up here and test these resistance. But this is a very, very thick resistance band between 41.50 and 4,200 right in there. It's going to be very challenging to get through that, and we think it will probably come down over here. So these supports here are 41.10 and 30. 39.70, just as it showed on the weekly chart. And this is your period for a correction. You could see the correction right in here. You could see the correction right in here. That's these two cycles coming down and the money flows coming out. Same thing right over here, and likely to get that correction right here. Now, I said to you that there's that bigger cycle that comes out into May. This one right over here points to May 20th. So that says to me this is a very choppy period likely in here. We'll probably come down here to close to 4,000 or a little under, then get another rally out over here, and then come back down to those levels again. So I would call that a decent range that you'll see here, probably something around 170 points right in this period through these next potentially 6-7 weeks here. So we don't look for a runaway, we don't look for a big decline, but we do look for a range and choppy action. I want you to see right in here, the slim ribbon is giving you this upward shape. Here's where it turned positive right here and is continuing. Here you can see when it was negative, you were getting these downward signals. Here it turned neutral, and here it's turned positive again. So it's going to be really a challenge for it to give up a lot of ground, and this is a widening slim ribbon, which just says there's going to be buyers in here all the time, and this is not a very deep correction that we're looking for. If it only gets down to 40-10, it's only 100 points, and the S&Ps are about 2.5 to 3.5%. It's very little, and that's kind of the range that we think the market's going to be in right now. So the weekly chart showing right in here that it's up to a resistance area, likely to come down to that rising minor support area once down into April, then again out into May, and you could see how that sets up right over here looking at the daily chart. We would say that this is probably going to be one of the better trading markets once the volume comes in, again, because right now we're in the holiday week and it has been dreadfully slow for trading. So I hope you found that to be extremely interesting, and get ready to trade what I think is going to be a choppy range. Remember that our market condition monitor, this is the last weekend of this special that we're offering. This is an amazing application. It's a state-of-the-art planning tool that assists you in catching the impulse moves in the indexes, ETFs, and stocks. And most importantly, it will help you avoid being on the wrong side of the momentum trends. There are special settings for all trading styles, including our new optimized mobile version that you will just love as you see it on your iPad or your iPhone. It's very clear. Current members, go to the membership options area and click on Learn More on the home page, or you could sign up right there. And you're not a member, well, you need to join. You need to be at least a level 1 member to be able to get this special. $17.50 a month for this amazing app. That's 50% off, and that's your price for the next 6 months. We're going to lock you in at this price so you can really get a good feel for the value of this, as it really helps you to stay on the right side of the market. And when you do that, that's going to raise your batting averages. The whole concept here is that we keep you with this application more on the right side, and then you will end up with bigger winning trades than losing trades, and more often have a winning trade than a losing trade. That's the formula that you're looking for, and you can apply this right over your own work that you do and really get the benefit of it. So go to askSlim.com. If you have any questions, write to Matt at askSlim.com. $17.50 a month for the next 6 months. Just incredible for this application. You will just love it. All right, go to askSlim.com and do subscribe to the channel. Look around on YouTube and click that notification bell, like the video, give it a thumbs up. On Twitter, follow us at askSlim. And any questions that you might have, write to Matt at askSlim.com. That's it. I want you to be so incredibly careful. It is so crazy out there, and I'm always wishing you great trading.
Well, I'm going to sit